Sorry. All right, guys. So today is part one of the support and resistance class. Part two will be supply and demand. So just understand that this is only support and resistance, right? So there are a couple of points that I wanted to go over before we get into like the charts as far as support and resistance. So these are what you want to put down in your notes. So first, you want to plot the higher time frame first, right? You want to do a top-down analysis. The reason why you want to start from your bigger time frames, and what I mean by bigger time frames, I normally just use the daily. You can use the weekly if you want to, but I kind of just use the daily and 4 hour and 1 hour. Really, it just depends. I mean, if you want to plot on a weekly chart, that's totally, it literally doesn't make a difference to me. So it's ever you want to do it, right? So what I normally do is now I just kind of like start on the daily time frame, and then I just come down to like the 1 hour time frame, and then pretty much those are my levels, right? So the reason why you want to use the higher time frames is because they hold the higher time frames hold more weight. We all know that though, right? So if you see a level on a daily time frame versus a level on the 15-minute time frame, that daily level is going to hold more weight because it took, it might have been a couple of days that level can break above or break below, versus 15 minutes. Every 15 minutes it just can't break above or below, so it has more weight there. So that's what you want to start with, and I'm gonna get to it like how I use my supportive resistance. But in the past, I told you guys look for 3 touches, and I think a lot of people learned that where we're looking for 3 touches. Yes, we're looking for 3 touches, but I think that we need to kind of look deeper into that, other than just, oh, it's 3 touches, this is a level. Now what I do is that's been, took my trade into the next level, like went from, making a couple $100 a day, a couple $1,000 a day, to where now, these 20K, 30K, 50K days are starting to be a norm. And one of the things that I did was, instead of just looking and focusing on those 3 touch points, I started focusing on actual levels that are actually turning points, if that makes sense. And we're going to get into that in a minute. I'm going to show you on the chart, but put that in your notes. You want to look for supportive resistance levels that are actual turning points, right? So where price actually, reacted to and it rejected or bounced off of, you want to focus on those more than just 3 touches, right? Because when you do just 3 touches, I mean, we can start having a lot of levels, right? Number 2, and let me slow down if I'm going too fast, right? Put that in your notes. Number 2, focus on major levels. This is something that I think a lot of people should start doing more often, is focusing on major levels. A lot of you guys, I see, when you post your charts or whatever, a lot of you guys have too many levels, right? And that's not how trading works, right? If you have too many levels, it's going to cause a lot of things, right? If you have too many levels, you start to get scared at every level, thinking the price will react to it, right? How many of you guys, you made support resistance levels, and then you just kind of was hesitant to take certain trades just because it's a level right there. I don't know what it's going to do at that level, or I'm going to take profit at that level just to see it continue to run. And the reason for this is you have too many levels, right? And I know when you first start, we create too many levels as beginner traders, but this is something you need to focus on. Focus on the major levels. That's why I normally only do levels off of, I don't really go down to the 5 minute. I normally do about, the 15-minute, 1 hour, and pretty much the daily, and just call it from there. I don't really like too many levels. Next, so we call this analysis paralysis, right? So that's basically what it's called. And I got a link that you guys are going to read for homework tonight about this. But analysis paralysis, that's something major when it comes to trading, right? It causes you to not execute trades, and it creates fear, and it creates missed opportunities, right? And basically what that means is you overthink. I don't know how many guys, but how many of you guys are overthinkers? Like, you just, not even just in trading, just in general, like as people, as human beings outside of the markets, you're just a natural overthinker. If you're a natural overthinker, it's going to be way harder for you to trade the markets, because we start to think that, we start to just overthink things and just try to think too deeply, right? So the definition for analysis paralysis is an inability to make a decision due to overthinking problems, right? So we want to, I got an article for you guys to read. I'm gonna put the link after class, and I'm gonna just let y'all read that. But this is some major because a lot of you guys overthink way too much. Like when I be teaching y'all my trading strategy, I get a lot of people say, "Jay, is that simple?" I'm like, "Yeah, it's that simple, right?" You just made trading hard because you overthinking it, right? You see a bull flag, and some reason you overthink that it's something else, right? You just want to keep it simple. So I put down some tips, and this all matters, guys. I'm not just saying this for no reason. This all matters. Tips to fix this is keep things simple, right? We want clean charts, right? Clean charts. So what is a clean chart? A clean chart is clear support and resistance levels, clear supply and demand zones, and just the price action. You don't need all that extra stuff. You don't need 100+ levels, all that. You need clean charts, right? Keep trading simple, right? Next is another tip to fix this is control what you can control. Too many of you guys want to try to predict the market, predict where a stock is heading, all that. Look, guys, control what you can control. We can't control where the stock is heading. We just set our levels, set our stop losses, and just execute, right? Control what you can control. We can't control nothing else. Next, less levels. We already said this, less levels, focus on major ones. And then number 4, if you're wrong, that's okay. Move on. Too many of you guys beat yourself up about being wrong on a trade or, anything. Look, it happens. Move on to the next trade. If you're sized correctly, you will be all right, right? And here we go, the link that I was telling you about. I sent it to you guys. All right. So next step, number 3. This is key right here. I think this is really also what took my game to the next level was a lot of you guys have levels that don't even work anymore. Like a lot of you guys plot support and resistance levels from months ago and you still trying to use them, right? What I do is I fix my levels daily, right? People be like, Jay, well, that's going to take so much time. I don't care. You see the kind of money that we make in the market. You can go do some extra work, right? You can update. I update my levels every single day, right? And the reason why is because sometimes the markets just don't want to react to those levels, right? One day it might want to react to this one, and it might want to react to that one, or it might just be chopping around your previous levels. So, and you still trying to use that level and notice that level don't work, or it's just tripping, right? It ain't working the way you want it to work, right? So to eliminate that, update your levels every single day. Go in and make new levels, make fresh levels, right? I'm telling you right now, you do this, you will already be ahead of the game because a lot of people won't do that. They won't put in that extra time to, do that, right? I do that every day, like no ifs and buts about it. I'll always update my levels before I take any type of trade. I'll always update my levels. So every single day, like I'm so serious every day. Next, this is actually a little note that I put in here, guys. This right here will help you a ton, right? As far as this chart patterns, support and resistance levels, supply and demand zones, guys, using the line graph chart. So basically take the candlesticks off and using the line. Now, I'm not saying make a trade off of it, but to find nice levels and just overall like limit the noise, use line charts, right? So if I'm gonna show you in a minute, but if I'm making support and resistance levels, what I normally do is I drop down to a line chart just to make sure that those levels are, accurate, right? And this will help you because in trading, we have a lot of wicks and everything and just long unnecessary wicks and just stuff like that. So with the line chart, it deletes that, right? It keeps that out of your way, right? And that helps a ton with just identifying certain things. Next is add supply and demand zones. So obviously we're not going over supply and demand today. That's for the next class next week, but that's obviously what we want to do. We want to add supply and demand zones. The reason why we want to add supply and demand zones is because price never reacts to one particular price, right? It might go above a few dollars or below. You will see this a lot of the times where you trade in Tesla, Google, like stocks like that, they don't have like an actual one level. Like Tesla not about to hit 701 and just reject on the money. You know what I mean? Like sometimes it might go to 703, 705, above there and then reject, right? So understand drawing supply and demand zones allows you to, like understand what can happen. Like, oh, well, Tesla might not reject that 701, but it has potential to reject from 701 to 705. So I'm drawing this zone. So I know when it gets into this zone, right, that's the rejection zone. You get what I'm saying? The supply zone. So that's why you want to add supply and demand. If you're not adding supply and demand zones, I don't know what to tell you, right? Understand your levels. So these are some little notes. Understand your levels will never be 100%. Everyone has support and resistance levels, guys. Everyone has different support and resistance levels. So my levels might be different from yours. Yours might be different from mine. Yours might be different from your friends. Understand that we all have different levels, right? But I got a fix for this, right? You will be off by a few, and that's okay, right? You will have fake outs, liquidity grabs, stop loss hunting, etc. Anything that the market makers want to do to help, beat retail, right? They're going to do it. So understand, you will see a lot of times where we have those, fake outs where a stock will, go above certain resistance levels just to pull back, stuff like that. That's why we never want to trade a level without confluence. A lot of you guys, you see a support level, you try to place an order as soon as it hit that support level just to see it break right past that support level, guys. That's a no-no, right? We don't want to do that. A lot of you guys, you need confluences in your trading, guys. You need confluences. What confluences are, you need multiple reasons supporting why you want to take that trade, right? We don't just take trades off of just one confirmation, right? We want multiple, right? We want to build that confidence to actually take that trade. When you have multiple things agreeing with you, there you go. You're more likely to take that trade and this will be a better trade rather than you saying, oh, well, it bounced here last time, so I'm going to just take calls, right? Notes. These are notes that I want you guys to put down. All right, so when it comes to your support and resistance levels, wait for a reaction at that level before taking a trade. Pretty much what I just said. You want to see price actually react to that level before you place a trade. Some of you guys, and I keep saying it because this is true, I see it all the time, you know that it rejected there before or in the morning or something like that. So as soon as it get there, you're going to buy puts. As soon as it hit, you're going to buy puts, right? It didn't react to it or nothing. It didn't give you that confirmation that it was going to, follow this, listen to this resistance level or nothing. You took the trade blindly. That's what it was. You took it blindly. And then, when it don't hit, you lose and you get upset and you say the market is a scam. No, the market isn't a scam. You just didn't take it with no extra confluences, right? The market didn't want to use that level, right? So keep that in mind. Now, this is a quick tip I got for you guys. And as the mentorship goes through, I will definitely be teaching you how to do it. But because we're using high levels, right? Because we're using levels mainly off of the higher time frames, whenever a price gets to a level, like let's say that, you see a daily candle hit Apple at 150, right? And we know 150 is a resistance level for Apple. So, but you're on a daily candle. So that don't mean take it solely right then and there. Like, oh, it hit 150 rejection, I'm gonna take it there. No, if it hitting a daily level, guys, you want to come down to those lower time frames and you want to find some type of chart pattern, some type of trend lines, something like that that can, give you an opportunity, right? We don't want to just take these trades at these key levels just to take them, right? We want to have the lower time frames agreeing with, the move down to reject. Because, for example, I'm gonna show y'all an example in a minute. But let's say that, Apple was at 150. So we wanted it to break that 150 level before we can take calls, right? So let's say that the daily candle was approaching that 150 level and you want to see it break. Well, you want to come down to probably about like the 15-minute time frame, and you want to see like, is it a double bottom right there before break? Is it a trend line break? Is it a bull flag? Like, what is there supporting this reason for it to break out this level, right? Other than just saying, oh, the daily candle is approaching it, so I'm gonna just take it, right? And like I said, we're gonna get into that. Also, this is key right here. This is why I wanted you guys on class, because the way I make my support and resistance levels is pretty much similar to pivot points, right? So plot more levels that are similar to pivot points. Pivot points don't change. We all have the same ones. Peep what I just said, right? So earlier I told you guys that everybody has different support and resistance levels, but everybody has the same exact pivot point levels. Did that make sense? So like I can go in today and plot my chart and be like, hey, SPY is resistance at 381.20 or something like that, right? And somebody else might say, well, I got SPY resistance at 379. Well, when it comes to, pivot points, we all got the same pivot point. You know what I'm saying? So you want to keep that in mind. Now, I don't use pivot points. I'm just going to show you like how like I base my support and resistance levels off of these points, right? Next, lastly, as far as this, don't use alone, like we just said, drop to the lower time frame. Taking trades off the higher time frame levels. So far, did any of this? Oh, guys, let me delete this real quick. So, real quickly, did any of this? Did everything I say make sense so far? Make sure I'm not losing no one. Everybody good? All right, cool. So now let's get to the fun stuff. Let's get to the charts. Let's get to the charts. All right, can y'all see my chart? Because I just clicked over. Okay. I'm gonna get to your questions in a minute. So if you want to know, like just right off the bat, pivot points, all you gotta do, they have an indicator for pivot points, guys. Y'all know how I am about not using indicators, but if you wanted to, you can if you want to. Hold on, let me move this out your way. Okay, let's put that up there. So they have an indicator. When you go to trading view, you click this right here, you just type in pivot points, and then they have the first one. You can just click that one, and there you go. Oh, wait, no. Must have clicked the wrong thing. Pivot points. All right, so this is kind of what the indicator looks like. So you have actual pivot points. So that's all it is. But like I said, I'm not going to like show people pivot points. I'm just showing you what it looked like. It's an indicator. But like the way we make our support and resistance levels, it should already align somewhat to the pivot points. And I'm about to show you how. So, but that's a cool indicator that if you wanted to use it, you can. I told you guys, I'm all about, trusting yourself rather than the indicator. But like I said, they're there if you need them. Okay, so first, right, we're on a daily time frame when it comes to SPY. So what I'm looking for is not necessarily the 3 touches, like we want that as extra confirmation, but mine is where we had turning points, right? So where price went up and then it rejected somewhere, those are the levels that I'm actually mainly focused on, rather than, oh, it touched 3 times here, let me plot that, it touched 3. No, I want to see aggressive turning points, right? So right here, I'm gonna plot my first one that I see, right? Aggressive, right? It ran up pretty hard, rejected, came down pretty hard, right? So we know that's a nice turning point, right? Next, we're going to go here, right? We had an aggressive move down, right? Then we look right here, we had an aggressive move up off this level. I'm gonna plot that level. So I think you guys are starting to understand a little bit. I'm gonna do some more examples, but I'm looking for where we had always plot the highs and the lows, of course, right? We got the low right here, and then we have the high right here. But overall, all I'm doing is I'm just going in and I'm looking for those aggressive moves or those turning points, and I'm just plotting those, right? So I'm just looking, and if it ain't clear, don't take it, right? This was a aggressive move up, right? We want to plot that. Came back, bounced at that level again, aggressive move up. So I'm pretty sure you guys are kind of seeing where I'm coming from. Those are how, and I'm also looking at highs, swing highs, swing lows. Those are similar to like pivot points. So we're coming here, right? We ran up to that level, boom, rejected, came back down. So that's what I'm looking for. And you want to make sure that your levels are acting as support and resistance levels. So right here, it was a support level. And then once it broke below, it then used that as a resistance level. So we want to look for aggressive moves. So now what I like to do is, especially for beginners, or just not even really for beginners, right? Sometimes, especially in the kind of market we in, guys, come down and do the lines, right? Come down. I just found this out today. I knew how to do it on the phone. I didn't know how to do it on desktop. So come to here where it say candles at, come to this line chart, and there you go. Come here. Look, it's a lot cleaner, right? And it makes your levels a lot more, reliable. So I come in here, I'm looking for supported resistance levels where it may aggressive buying it. Aggressive moves. And I'm just going around like I don't start from the top and go to the bottom. I'm just coming back and I'm just looking like, hey, like, where is it at? Okay, you know, this was a pretty decent move up here. We bounced, right? And that's all I'm looking for is just turning points. So right here, overall, I think that's pretty much it for what I would like. So then I just come down to that, kind of like the 1 hour, 2 hour, however you want to do it. Not gonna lie to you guys, I'm not really a 4 hour trader. I do go in there if I have to, but I kind of just come down to the 2 hour and the 1 hour. The reason why is because I'm a day trader and I'm a short-term swing trader. So for me, getting a lot of my levels from the hourly chart is kind of my thing because those levels hit a lot quicker than daily levels. So like, that's how when you guys be seeing me in these trades and y'all be wondering like, how do I, why do I buy weeklies on certain swing trades? And it's because most of my targets are coming from my hourly time frame. So we know like it's more likely to hit quicker. So that's a little gem for you guys. You don't gotta know all that right now, but overall, that's kind of how I do it. I come down to like the 2 hour and the 1 hour and kind of just make more levels, see what's clear, right? If it's not clear, I don't want it. So right here, we had a nice little double top rejection here. And that's all I'm doing, guys. Like, it's not complicated. I'm just coming in here. I don't want my levels too tight. When you have your levels too tight, you have a problem. I don't want to really put that just yet, just kind of just plotting levels. Let's see. I applied that one. I ain't really liking this level too much, a little bit, but it's fine. And that's what I'm doing, guys. Like, it's not that hard. Coming here, you're going to have to play with it a little bit, but I'm just looking for turning points. I don't really care about all that other stuff. I want to see where price actually rejected the levels at, and I don't like my levels too tight. You know what I mean? So I just come here, go through it. When you have levels too tight, like for example, right here, people will plot this level. I'm about to just show y'all. Let me make this a different color. Let me show y'all like the difference because I don't think people understand the difference. So y'all see this level right here that I just drew, this orange one. I don't like this level, and it's for a reason. It's because we didn't really have too much aggressive moves bounced off this level. Like, yeah, we had like a miniature bounce. It did make a bounce, but it kind of like really held that next level. But like those, it's fine to plot it. But like I said, guys, I'm more of I only like the levels where we had like nice moves at, right? Where we had like real major moves at, and I want to use those, right? So those are my like key levels. I'm not really liking that one, but if you plot it, like I said, it's fine. But like some of these like levels where it don't really make a huge move off of, they end up just like getting blown right past, right? So for actually right here, this is actually a good example. So right here, we bounced off this level, bounced off of it again, came back, bounced off of the short term. But then as you can see, when it was time to use that level as resistance, we kind of just broke it and then dropped. You know what I mean? So it's kind of one of those things where it's like, I want levels that's making aggressive moves off of, and then come down to those, keep coming down to those lower time frames and then do it that way. So we on a 1 hour, pretty much seeing if it ain't clear, guys, don't take it, right? Other than that, I don't really see too much else that I like. I'm not about to plot that. I'm not about to do that, right? I'm just looking, I kind of don't see anything else that I like too much. And then I'm going to just roll with it, right? So also, when you're looking at support and resistance levels, guys, also, you see how with the line chart, you can kind of see patterns a lot clearer, if that makes sense. So like right here, with the candles, you probably didn't see that, but right here, we have a clear double top. You know what I'm saying? Right here, we have a ascending triangle, right? With this, you can kind of get some more cleaner charts, some clearer patterns in here. Right here, we had some type of double top. We have a head and shoulders right here, right? And that's what I'm trying to get you guys to understand. Use the line chart, guys. Use the line chart, right? Because with the line chart, you can see things a lot cleaner, and then you can move back down to the candlesticks, right? So like right here, we have a So we drawing this head. I'm just drawing this for you guys to see it. Okay. Right. And if you would have drew it correctly, you would have had this right there. Right. We had the shoulder, the head, the shoulder, and then the breakdown. Pretty easy to see when you look at it from a line chart. Like I said, candles sometimes be a little bit too much noise. So this is like the way to block out noise and then go from there. And now, as far as the lower time frames, guys, I don't really, to be honest, I don't really chart the lower time frame levels, if at all. Honestly, I only trade off of the big levels. And the reason for that is I want those higher percentage gains, but you can come down to the lower time frames whenever you want. But I just want those, the higher time frame gains. So I personally like using those, trading off those bigger levels, if that makes sense. So somebody that's trading off, they're making these 5-minute, levels, their levels are going to be tight like this, right? I'm just doing this as an example. I'm not making real levels right now, right? The levels are going to be tight like this, right? And that causes, as soon as it gets to this level, they get, oh, I'm taking profit just to see it, probably make a move like this, right? And they be like, man, I took profit. I understand taking profit is fine, but the quality of trades, and it just makes sense if you're taking them off those key levels because you get a lot cleaner trade, right? Because the big money, they're not doing all of that. They're not doing, some of them scout, but most of them, they're not doing all that quick from here to here. You know what I'm saying? They're literally waiting for these key levels to get in these big moves, right? Like this is why you trade from key levels. Because look, guys, this is a good example right here. Because I know people are going, say what they got to say. I'm just trying to help you get those higher percentage wins, right? And I'm just trying to keep it simple. So you see how these are key levels, right? These blue ones are key levels. So you see how it formed this pattern and then it broke down, and you've seen this aggressive move from one key level to the next. Once it broke this key level, what happened? It went down to the bigger key level, bigger key level, bigger key level. Versus, let's go ahead and draw like most people are gonna draw. I'm about to show y'all why I like trading from key levels to next key levels. Let me show y'all why. And just chasing it with a stop loss instead, rather than, trying to, let me show y'all why I prefer the key levels. So let's say that you were doing supporting resistance levels like you normally do, right? Your levels would have been so tight, you would have missed that move. Your next level would have been here, right there. We had a rejection there. Your next level would have been right there. We bounced there, right? And you would have just started clouding your judgment, right? When is the next one? Right about here. So yeah, I see that. Y'all get what I mean? Like putting those smaller levels and using those, you missed out on the whole game, right? Because you were doing all of this, noise, right? You were missing out on this whole entire move because you plotted your levels so close to each other. So you didn't even catch the whole games. Now I'm having people say, well, Jay, I'm cool with that game from there to there. That's totally fine. I'm not saying that none of you guys are wrong. I'm here to teach you guys how I do it. Like, for example, the gains that I make, I'm not risking, I keep telling people this, I'm not risking $100,000. I'm not risking $100,000. I'm gonna tell you exactly. I made $72,000 today. I'm gonna tell you exactly what I did. I put $13,000 in the first play. That play took me to 33 grand. I used that 33 grand to put it back in another play. Took a day trade. That day trade went over 170%. That turned it into 58K. And then I swung CrowdStrike that went over 100%, right? So as you notice, I don't put in a lot of money to make money, guys. And the reason why I don't have to do that is because I'm not going from here to here. You know what I mean? I'm looking at my key levels. I'm waiting for my key levels to be met, and then I'm placing my trade. That what gives me a better quality trade, right? If that makes sense. That gives me a better return on my money. That gives me a clearer stop loss, right? Because key levels, those aren't about to just be getting blown past right away, right? Key levels are pretty strong levels. So they're not about to just walk right past them. You know what I mean? So that's just me personally. Now, so that's pretty much it for support and resistance. I know this class is pretty short. So what I'm going to do is, I already knew it was going to be short. I'm going to start taking some questions. I'm about to stop the recording. I'm gonna start taking some questions, and then I'm I'm gonna record the question session as well. I'm gonna upload that, but I'm just stopping recording for learning purposes. And then I'm gonna record the question session. But that's pretty much it, guys. As far as support and resistance, like I said, it's pretty simple. We're gonna go over supply and demand next class. And yeah, so I'm about to start taking questions now. I'm gonna open the chat back up. I hope that everything made sense.